Hey guys, welcome back. This is a Co-Travel with Bob Piercy podcast. And today I'm really excited and happy to have on Tom Christensen, the managing partner of Yates Whitaker. Tom, thanks for doing this today.
Thanks, Bob.
How's the family? How's the team at the office doing in regards to COVID, getting back and looking forward to spring and summer?
Family is tired of being in the house. Team is tired of working. The accounting world has been we've been on a treadmill for probably the better part of a year, and usually we get a little break off of tax season. But yeah, we get hit from all angles: banks, government, new programs, subsidies, tax filings, all that sort of stuff. So yeah, the accounting treadmill has been running full steam for a solid year. So
well, I do thank you for taking the time to have this conversation today. I do appreciate it. And I guess real quick, I just wanted to kind of start off with, I've known you for quite a few years now. You've actually spoken at our branch office a number of times, and we've had these group panel conversations, and you've been generally an anchor on those conversations, and one of the people that I think is most returning, but also really appreciated by a lot of the doctors listening. And you seem to have so much specialization in the dental industry. Like, do you consider yourself like an accountant who specializes in dentistry, or is accounting, and doesn't matter whether it's a dental clinic or any other corporation? Like, is that what you guys do, or again, are you truly dental specific and specialized?
Oh, good question. I'd say there's nothing in the Tax Act, and there's nothing in it. There's no specific Tax Act that's written for dentists, and there's no specific accounting handbook that's written for dentists. But as you work with them, you understand the business better. And as you understand the business better, you understand some of the nuances of it. Like, there are a certain set of tax plans that usually make sense for dentists to execute at certain periods of time, things with insurance, things with extracting money from corporations. The one thing with dentists is usually the income, dentists' net worth tend to go kind of on a level plane upwards, whereas some other businesses are cyclical, ups, downs, things like that. And also the value of the clinics seem to always trend upwards. And I wouldn't say always, but the value of the clinics, the market's very good as far as buying and selling. It's very liquid. So you start to learn the landscape a little bit better, and you say, okay, well, a certain subset of tax plans works well for these dentists, and you tend to do that fairly regularly. And okay, these are how this particular business is our value. So I'm not a chartered business valuator, but since I've seen hundreds of dental appraisals, I kind of know what I'm looking at fairly quickly. You also dive into what the business is. So if you don't know dentistry, you'll see somebody spend money and they'll be like, oh, okay, well, that's just supplies. But inside supplies is also maybe lumped in lab costs, because you don't understand the difference, and you don't understand how lab costs might go down if they buy a CEREC machine or whatever it is. So there's no specific rules for dentists. But when you get to know the business better and better, and you get to know the landscape in which they operate in, from financing, value, all of those things, then yeah, it does become a specialty, even though there is no specialist of dentist accounting per se.
Off the top of your head, just like to give an example, like what of your book of business, what percentage of that is roughly dentistry? Is it 100%, 50%?
That is a good question. I would say probably 75% of my time is healthcare. Of that 75, probably 50 of the 75 is dentist. The other 25 is medical, and they have different needs at different times. The earnings are very different depending if you have a doctor working in a hospital versus a dentist who started up a clinic. Their financial balance sheet, their personal net worth, their opportunities, their growth struggles will be very, very different. Similar to if somebody wants to be an associate for the duration of their career versus somebody who wants to build a clinic from scratch. So it's very different. So dentists tend to pursue purchasing a clinic or building a clinic or partnering a clinic fairly frequently. So I spend a lot of time in there. And so I'd say 75% of my efforts are healthcare related. And I'd say 20% is some maybe high net worth or high needs other clients. And I like I don't ever want to give that up, because that exposes me to lots of different things, lots of different fresh ideas that sometimes you can bring into dentistry. Some different plans, some different understandings of how capital markets or venture capital or private equity or those things work. So I tend to like to keep my finger on the pulse of how that goes. And then the other 5% of the time is just for other clients that we service.
I had an earlier conversation with Jennifer Buchanan, who's an interior designer, and she kind of gets pigeonholed by a lot of people in the dental industry and also outside, just thinking that she just does dental. But she talked about just exactly that, having experience in other industries and just to draw on as an experience. And sometimes you learn something outside of dental that you can apply and bring into. And so, but again, she does a lot of dentistry, a lot of dental designs. But again, she isn't specialized or solely on dentistry. And I think kind of like yourself, you're heavily involved, and it's a good chunk of your time. But again, yeah, there is opportunity and benefit to not solely 100% being in the dental market.
Yeah, for sure. I find that for sure.
No, good. Hey, we were talking a while ago, and of course, like COVID has kind of disrupted a lot of the conversations we've had or would have had. But recently, and I'm saying recently because this was before COVID, though, you went down to Australia and you visited a number of the dental schools down in Australia. This is something I'd never heard of anyone from Canada doing before. But what did you do? What was the purpose of the trip, and how did you kind of hear about the opportunity, or what made you go down there to visit those dental schools?
Interesting. Another good question. You're good at this, Bob.
Thank you.
Podcasting, natural. It's first, I had some friends and acquaintances leave to go to school there. Then I also had some clients who were Australian and they came to start practicing here, and they were trying to find an accountant. And then I had more acquaintances go down there, and then I had some practices associates from there, and they were trying to get set up. So then that obviously sparked, like, what is going on down there? There seems to be a fair amount of a volume that's generating from here. So then I poked in and figured out, like, okay, there's this many universities there, and how many Canadian students are in there, and how, if there aren't even Canadian, how many foreign students are there that might be interested in coming to Canada, and you figure out kind of the size of the market and what's going down there. And then I thought, well, over here in Canada, they'll have job fairs, trade fairs, and people pop by and do PowerPoint presentations on dentistry in Canada, on accounting and law, insurance and wealth planning and all that stuff. They just get it. People just go there because it's right down the street from our office. It's where the university is, at the U of A anyway. And I was like, well, they're on an island. It's a big island. It's a continent, but they're on an island. They get some of the dentistry business knowledge from an Australian perspective a little bit, but they don't understand necessarily the landscape, and there's nobody that's talking to them that's coming to them like they come here. And numbers and where things are trending in dentistry is, if you own a clinic, it is definitely a business. It's still a profession, of course, but there's a big business component to it, and that's becoming more and more important. And I thought, oh, let's see if there's an appetite for them to get some knowledge. And it was really interesting over there. I mean, they loved it. It was really good. I mean, you go here and no disrespect to any students here, but they get it a lot, right? And so you can tell oftentimes that they're like, you're talking to them and they're like, okay, yeah, but I got an exam and I got a this and I got a that. I mean, they're partly engaged and they're partly not. They're pretty focused because they didn't have the opportunity to get it, which was really fun. So I had a great time over there. And then, started to continue conversations. Don't know when we'll be able to go back over there. So now we have to figure out virtually how to talk to them. But it was really interesting to learn the nature of what's happening over there and how it might affect dentistry in Canada.
So, and actually, that was my next question. I was going to ask you, like, from your short time being there, like, how did you see, or what did you learn about the dental industry in Australia, and how does it compare to the Canadian market?
Didn't learn a ton about the dental industry in Australia per se. It seems to be my perception. I don't have any facts or numbers to verify this. My perception is that the corporate models kind of run its course over there. The relationship that dentists have with their clinic is typically one of an employee of a set salary per month. That's kind of what it's like over there. As far as the exposure and as far as how those schools work, some of the differences I found was fascinating is the elasticity of the program seems to be able to increase and decrease fairly quickly. Like over here in U of A, mostly is you know, the university I talk to, it always seems that the number of students are 30 to 40. That's just what it is, or 35 to 45. It's a very narrow bandwidth. But you go over there and like, oh, well, we had 60 and that was in year one when some students were over there. And now when they're done in you know, year 4 or 5, they're onboarding 85 students here or 90. Like, how did they increase their capacity like 50% in like just a couple of years? It doesn't seem to happen here. And a lot of it is very demand driven. A lot of it's students coming from here who want to go to the university over there for whatever reason, be it ease of entry, be it a faster route, not as difficult to get in without going through a full undergrad degree. Could be lots of reasons. Could be just a different experience in a different company.
Because it is direct entry from high school, correct?
You can do that. Yep, you can do that. I didn't necessarily meet anybody to do that, but my understanding is, yep, you can go direct entry from high school. You'll have 5 years to do. That's a big, and when you understand the financing of it, it's, oh, that's a big commitment. You better be sure you want to know you do that if you're going right out of high school, because it is not an inexpensive endeavor over there. It's not uncommon from my perception. Students who go over there, Canadians who go over there, over here, dental school is expensive, and a student might have coming out of it without family support and whatever else, they'll typically have between $250,000 and $350,000 of debt, and there you can kind of double it if you don't have family support. So they're coming out with large debt loads to do that. So out of high school, you'd say, like, oh, I really hope you, if you wanted to attempt that, you better know what the profession is like, and you better know that you like it, because you're about to commit fairly heavily to it.
And when you said earlier that in Australia, the corporate model has kind of run its course, like you're referring to DSOs, like large organizations owning multiple practices. It's much more saturated in Australia than it is in North America currently.
That's my perception, and my perception also is that the dental model there, they didn't necessarily leverage off of hygiene like they tend to do here. So dentists would frequently, from my perception, and I don't have any dental clients who have dental clinics in Australia, so I don't know, I haven't seen the numbers, but my perception was, talking from students who have done practicums and locums and whatever, that oftentimes the dentist would be doing their own hygiene. So in Canada, of course, we have a leveraging model where you'll leverage off of the hygienist as much as possible, and the dentist sticks to the procedures that they're qualified to do, where that's not necessarily the case over there from the information that I get.
No, it's interesting because obviously, you know, we have DSOs in our market now. They've been here for 10ish or so years, and everyone is concerned, and it's a common topic on this podcast. It's a common topic of conversation I have with my clients, and just again with my peers that I work with, as to what's going to happen. And we obviously compare ourselves to the US a lot, because we're generally 3 to 5 years or so behind the US in regards to adaptation, and the DSO market is more established there than here. But again, we see it growing and changing in Canada. Then with this Australia opportunity, it's really seeming like Australia's making it easier. And also speak to on like the board exam, like they're making it easier for Australian students to write the Canadian board exams than it was in the past, correct?
That's my understanding. I don't know necessarily the details of how exactly that works, but I know, yeah, the exam, you go there, and when you're done, you're able to come over and you're able to write your boards. And so I've had students that were native Australians come over and write Canadian boards and practice here. And then each year, the amount of students in Canada that's graduating over there comes over. It seems, from my perception, to be quite substantial. It's well into the hundreds per year over there. Mm-hmm. And some students in each city that we visited had its own flavor. Like in Melbourne, there's lots of people from Ontario. Sydney was a lot from Vancouver. Gold Coast was a lot from Alberta. That was Alberta, heavy center kind of population. So yeah, they will go over there, right, qualify, finish their school there, and then they come over and write the exam, and provided they pass, they start to practice.
I was talking to an Australian student who's actually was working in a rural practice. And what I heard, and again, I believe her for saying this, but she said that they're actually offering the Canadian board exams in Australia now, where in the past they
Hmm.
would have to like fly to Toronto during the midst of their own, final exams and write the Canadian boards and then fly back. And that's obviously a long trip from Australia. But now those board exams are being, offered in Australia. So it's just making it that much easier for them to write it. So, and I'm not trying to make like this
Hmm.
like
Interesting.
a downer conversation. I'm not trying to like be doom and gloom about dentistry in Canada or Alberta by any means. I think there's always an opportunity with this, and whether that's hopefully on the horizon, it's easier for dentists to find associates. Maybe that's going to become a thing if we have more influx
Hmm.
of associates into Canada. So again, you're the first person that I heard of who did this. I think it's an interesting story. I thought it'd be kind of worth touching on because we don't know what we don't know, and
Hmm.
it's just again the expanse of opportunity that still exists. But again, there's just things people should be aware of. Um,
Yep.
and you plan to go back again once you can?
Yeah, eventually. I mean, it's a long trip, and it takes a bit out of you, but it was definitely fun. It's worthwhile, I think, going over there every couple of years anyway, just to touch base and see what those students are worried about. And they just had different concerns and different perceptions. So it's just good. It's always good to from my vantage point, it's always so I feel like I'm able to do my job better if I understand what people are worried about, concerned about, and what they think about, from the students on up. So the more conversations you have, the better equipped I feel that I'm able to do my job.
No, absolutely. Now going back to like the accounting topic, putting your accountant hat back on, not your world traveler hat. I guess like what conversations like right now today should doctors in Alberta be having with their accountants? What is the what are the top topics that really should be discussed?
So top topics, I'd say a lot of people. Number one would be there's a fair bit of anxiety over long-term tax consequences. We know that the government has layered on a substantial amount of debt, and then who is going to be a target to pay it back? Well, it would probably be higher net worth people, of which dentists often fall in that category. So preparing yourself and buffering yourself against potential long-term tax consequences would be a big one. I tend to be having that conversation a fair amount at this point in time. Just like, okay, well, our tax landscape is this right now, and if I look at this year right now, we're sitting good. But next year, if we're going to upgrade our house and we're going to buy something more expensive, and if there's personal expenditures that would be coming in the next 3 to 5 years, sometimes people want certainty over their tax landscape now, and so they're willing to trigger some more tax now in order to prepare themselves for the unknown and the anxiety that most people feel, is we'll be in for a rougher tax ride in the future. So a lot of long-term conversations around tax planning as opposed to just short-term. Sometimes clients still give you the objective of just like, I want to make my taxes as low as possible now because I want to preserve cash. For whatever financial scenario they're in. So that's sometimes the driver, but I would say usually it's long-term tax wealth planning, for sure, that's happening more, which leads to a whole bunch of subsets of different topics. So that would be one. Other ones that I talk to quite frequently is especially on clinic owners that still have bank debt, and if they're not too far into their clinic ownership. They are learning that what their peers or their mentors said it would be like dealing with a bank is not necessarily the case anymore. So banks are looking at your numbers. They're comparing the forecasts that you gave them when you said you were going to build the clinic to your actual results, and they're asking you why you may or may not hit those results, and they expect reasons as to why or why not. And they're also looking at like, hey, there's bank covenants, and bank covenants would be something that some dentists historically might have been aware of, but nothing ever really happened. There was no consequence. It was kind of like, oh, you violated your bank covenants. Oh, well, that's not a big deal. They have a magic wand in their world and they want to keep you as a client. And now it's not necessarily that easy. So some things that have always been around, but weren't necessarily at the forefront, are now more at the forefront. So when you're buying a new practice, maintaining its existing revenue levels and patient base and growing it are important. And when you're building a practice, the projections that you put, they're likely going to be measured as to how close you were to hitting those things. So those would be a couple of the topics. Long-term tax planning, your relationship with your bank is critical. The long-term tax planning often comes with long-term wealth planning. And so coordinating with the financial planner, the insurance advisor, all of those types of things are becoming more and more important, just so that everyone's kind of direction reset and everyone kind of, I shouldn't say reset, everyone's direction or their ability to, their preparation to deal with unknown risk. They're more aware of that now. And so some things are being reshifted or reset. So those are some big longer term things that are happening. And then of course, what's my practice worth? How do I stack up against my peers? All of those types of things as everyone from the banks to the business owner, focus on their numbers, their burn rates, their cash flows, their net incomes, their profit and losses. So, yeah.
No, thank you for that. And as you're saying, I had this thought, we used to always kind of say in joke, and it was not really a joke, it's kind of the reality as I understand it too. A dental student or an associate who's been out for a couple of years wants to go open their own practice. You kind of walk into the bank, say, "Hi, I'm a dentist," and they say, "Hey, here's a blank check and go do what you want." And that's the way it kind of was for a time. And now that's changed. And we're hearing stories about exactly like you said, business plan strategies, growth strategies, marketing, all these things are being taken into consideration as to whether or not you qualify for a loan to build a practice or to buy a practice. So that's a lot more work is going in that front. Now, I know I'm not an expert by any means, but as I understand it, for example, publicly traded companies, part of the importance for a stock price and evaluation is consistency. And having a huge spike in revenue and production would be seen as a good thing, but again, it's not consistent, so that can actually not have as strong of a positive effect on a stock price as you might think. And so you want a consistent gain, so your stock is consistent and it consistently rises. If you do a marketing plan for a practice and you blow the doors off the plan, of course you're making money, that's a good thing. But does a bank, are they going to be as concerned about that, or concerned as to why, like, how did you not know you were going to do this, as opposed to, putting a plan together, not hitting those targets? You see, I'm going with this? Like,
no, I follow you. That's a good, how to approach the bank and how to deal with it, especially if you're a younger dentist looking to buy, is become a bit more of an art form. And you're exactly right. I would say 3 to 5 years ago, you could go into a bank and say, "Hi, I'm a dentist and please give me some money." And they were, for the most part, just going to give you the money. Now there's been some larger clinics that have failed, some groups that have failed. Everyone's a bit more nervous for COVID, and the dental industry got shut down here for a little while. So these trends have started to happen before, but you're going to have to tie everything together and have it make sense. And so, for example, if you just rip off a business plan from some website template thing saying like, "Yeah, I plan to advertise heavily in Google and SEO, and I'm going to do some, direct mail or whatever," and you have all of that in your business plan. And then if all that filters to the accountant when they're going to do your projections is, "Well, geez, we're showing a negative net income in the first year or two, and maybe that's okay in the first year, but the second year the bank won't like that. So to make us show positive net income, let's just say their advertising budget is $2,500 a month." Well, that doesn't make any sense. You told them in the business plan you're going to go heavy on it, you attract all these new patients, and then to make your numbers work, you just show some number and said that it's, "Well, look, see, I'm profitable now." So they're going to read it. They're going to try to understand what you're going to do, how you're different. They want to know that. They'll also want to look at your associate track record. I've seen that happen too. If you're saying that, "Hey, I'm going to," in your business plan, if you're saying, "I'm going to be billing $1.2 million by year 3, and of that, it's going to be $800,000 of dentistry." So back doing the math from that, be like, okay, well, that means that that's going to be what the exact math, maybe $350,000 of net pay to a dentist. Well, if all you've ever produced in your associate positions is, and I shouldn't say all you've ever, it's not like it's a disparaging thing, but the bank will look at it. If on your tax returns prior to opening a clinic is the most you've made in collections is 180 grand. And then you're saying that you're going to be able to handle without an associate, collections in your pocket. If you treated yourself like an associate of $300,000 or $400,000, say, well, can you do all this work? That's a big spike in your earnings. Are you equipped for it? Do you have the skill set to do it? What's going to justify it? What procedures are you doing? How much are you charging your patients now? How much are you going to be charging your patients? What's the skill set? Are you learning Invisalign? Are you learning implants? Like, what is going to be the cause of this increase of revenue, and how are you going to handle it? Assuming you don't have an associate to plan to help you in the practice. So everything now, needs to be tied together. They'll look back at history, and so there's just more eyes on it. I think the banks are realizing that if you, and it's a thing that is in the non-healthcare world. In the healthcare, they have special banking bubbles around them in Canada, especially, and they get a lot of what they ask for. But if you're not in healthcare, there is no business where you could walk into a bank and say, "Hi, I just graduated school. I'm $300,000 in debt. I have no net worth. Please give me $1 million. I'm not putting in any of my own money, and I'm going to build this clinic." Like, that would never happen ever. But in dentistry and healthcare, it has happened historically. And when banks start to have some problems with some of those, then they start to look a little harder at who they're offering that to, because the bank really doesn't have a lot of recourse if things go sideways. They're not going to be able to get back the money that they're lost, typically, if the clinic goes sideways, and they're looking at somebody who just has student loan debt, no net worth. So yeah, it's a different landscape. And also, I've noticed that the bandwidth of what the banks are offering has also started to widen, which is interesting, because before it'd be very narrow range. It would be like, yep, historically, I want to build a new practice. Okay, first year interest only, it's a 10-year amortization, and away you go. Now you've got 12 years, 1 year interest only, 12 years, 2 years interest only. You've got different working capital amounts. You've got different interest rates depending on what you want. So there's starting to be a bit of a bandwidth in the offerings that the banks are, depending on what bank the dentist is engaged with. I've noticed a bandwidth on what banks are offering. So that is also, usually historically in healthcare, when one bank has moved to offer something a little more competitive, the other ones try to figure it out because they'll lose business, and then they make the changes. But that hasn't happened as rapidly as I'd expected. Some banks are still 10-year amortization, 1 year interest only, 10-year amortization, 2 years interest only. They're not going to go to a 12-year. So that's a couple of interesting things that I've noticed over the past year for sure in financing.
So on that point, conversations you're having with your clients, is that then allowing you to understand your client's position, again, whether it's a new associate looking to buy or build, or again, a more senior dentist in their career? Is that then allowing you to see opportunities on changing banks because of what banks offer in regards to financing plans?
Yeah, it's I don't know, it's just more consciousness of it's not as product-esque as it has in the past. By product-esque, I mean, like, well, what you get is the same. You buy it here, you buy it there, it's the same thing. It's going to be a little different. And the banks might adjust what they offer you based on the risks they perceive. So if, for example, you are a dentist who has you say you're 5 years out, you have paid off your debt as fast as possible, you have incorporated and you've saved up a bunch of money in your PC, you're likely going to get a very strong offer from a bank. If you are pushing and you have an associate position and you want to leave that associate position and build after a year, they're going to be a lot more nervous, and it might even be hard to find financing at all for that particular dentist without that track record. So it's just different, and the banks will change their risk profiles as time goes on. I don't know how and why exactly they change their risk profiles and when, but they are able to, and they sometimes do. So for whatever reason, if one bank they feel they're overweight in healthcare for any particular point in time, it's going to be more difficult to get applications through. Other banks will feel they're underweight and they'll throw aggressive offers at it and try to be market leaders and change. So you kind of have to keep track of where the winds are blowing and be a part of all the conversations with all the banks. And I probably, in my dental space, that's probably what I spend 3 to 5% of my time on, is talking with banks. What are they financing? When? How? What are the variables? What expectations do they want? What do they want us to produce? That can vary. Sometimes it's like, oh, 3-year cash flow forecast. And it's like, no, we want every month and then annualized and then cash flow adjustments. And there you are sometimes wrestling and going back and forth with sometimes construction companies or distribution companies like you guys will over budget for some things just so you have enough room. So that's typically historically what I've seen done is they'll just say, well, here's a number. We don't think it'll be this much, but we just want to make sure we don't run out of cash.
Here's a financing quote.
Yep. But actually, when you go to take that number, which is going to convert into debt on a forecast, which is going to convert onto principal and interest payments on a forecast, you take that number and it's like, well, we can't make this cash flow positive and the bank's not going to lend it if that number is too high. So we can, and before it's a subtle shift. It's like, okay, well, let's just throw it out there so we know we won't run out. And now it's like, if you throw it out there like that, I can't make reasonable assumptions to make the cash flow forecast work, and they're going to say no. So we got to put what we think we're actually going to do, which puts more pressure on the whole process, right? You're trying to pull together a whole bunch of stuff as accurately as possible in a limited time. So there's more pressure involved with it, and more stress and a time component to it. But yeah, if people are just throwing over enough to give enough buffer so they don't run out, that's perhaps not the way to approach it anymore.
One thing I've noticed over the time I've been in this industry is there seems to be a lack of communication in the industry, and especially a lack of communication between dentists in the industry, and it results in a lot of confusion at times. Things about how do offices compare, and not on a competition standpoint, but just like how do two dentists stack up in regards to the efficiencies of the way that they're running their business? How do sundry costs compare? What does 7% mean to one person versus 5 to another versus 10 to the next? And I guess how can you break that down? What's the best way, or is there a way to really do that in this conversation today, or is that something that really deserves a deep dive and is so specific per clinic and per dentist?
Well, there are statistics that people are always trying to keep track of. What oftentimes muddies the statistics is at the bookkeeping level. So with bookkeeping, it's a garbage in, garbage out system. If you don't pay fairly close attention to what numbers are going into the system, you're not going to be able to get any analytics that help you, or that they might be flawed. And I don't necessarily even fault dentists for not throwing a lot of horsepower at their numbers, because when you throw more horsepower at it, it means that you're going to be paying more, and they might not want to. They might have a pretty good intuitive sense of what's happening in their clinic and not feel the need to do that. But when they compare statistics, which is a good thing to do, or they want to understand, they think, oh, well, salaries and wages, 25%, that's really good. 25 to 30, so I want to be lower on the 25. Well, what is in there and what's not in there? So they'll look at a number on a financial statement and say, well, my salaries and wages too high. Okay, yeah, but do you have your spouse who doesn't work in the clinic in the payroll? Because that's irrelevant. Or their office is built with their salaries and wages is higher, but that's because they have a highly paid office manager and a full-time bookkeeper and a this and a that. Whereas in other offices, they might subcontract some of that. And so they're looking at the salary and wage number, but they're subcontracting less, but their salaries and wages is higher. And usually those can be mashed together to kind of get a sense. So the numbers that get presented on financial statements, usually I'd say 98, 99% of all dentists, they engage their accountant to do what's called a compilation engagement. There's 3 levels of work we can do when a client chooses to engage us from an assurance perspective, which means give us an opinion on these numbers. So there's an audit, and everyone knows that word. They're like, okay, an audit, that's painful and a whole bunch of questions, and that's painful. I'm like, yep, And then there's a review, and that's the step down. And so a review is, okay, give us the number, then we're going to ask a bunch of questions on you. We're going to ask all sorts of, we're going to see if there's relationships between the accounts. So if your revenue went up a lot, we might ask, why'd your revenue go up? And they might say, I did this really great marketing plan. Okay, cool. But your numbers show that your marketing spend didn't increase. So that explanation doesn't make sense. So then we'll keep asking questions. So there's a lot of inquiry on a review. And the bottom level is a notice to read or a compilation. And that is the basic bare bones amount of work we can do on numbers. And if I was a dentist, I wouldn't want to pay an accountant to do more work, because there's probably not too much more value in hammering down exactly to the penny how much inventory you have at the end of the year, because it's fairly fluid and it's consumable. So the numbers that get presented in financial statement format out there in the industry, they can vary widely. Supplies is a good one. Supplies can be so fraught with problems, that number, that it's, if you got two dentists talking on the golf course, what they're saying their numbers are almost kind of irrelevant, because you don't know what basis. So common things that throw supply numbers off are, hey, I made a big, huge, my year end is March 31st. I went to PDC and I bought a whole bunch of stuff. Okay, well, if that just got expensed, then that would throw off your supply ratio quite a bit. But you might not have used it. It's actually inventory. It shouldn't be expensed at all. It's still in there. You'll also have hand pieces in there. You might have, there's contracts for maintenance on equipment. That might just be buried in there, because the bookkeeper's like, well, whenever I see Henry Schein, all I know is that it's supplies. So they just put it to supplies, but it's actually not. It's actually repairs and maintenance. It's a contract or some, whatever it is, right? IT might be in there. Lab is another one. So you can have all these things piled onto a supply account when it's not actually supplies. And so sometimes when you hear them talk, like, oh, well, my supply cost is 6%. Well, that doesn't make any sense. Mine's 14. Okay, well, look inside the number with the 14. And it's typically not something that the dentist wants to pay the accountant to dig in that deep and peel out where all of those things are. And the bookkeepers sometimes aren't given the information or the context as to what the cost actually is. The bookkeeper will just say Henry Schein. They'll type it on the bookkeeping system. It'll automatically come up as a supplier and a vendor, and it'll say it goes in this account, and that's where it goes. And then they'll do that so the bank reconciles. So when they talk numbers, the numbers typically for a dental owned and managed clinic, there's usually lots of leeway in the numbers, and perhaps not as precise. And I don't necessarily fault dentists for not being really precise, because it costs more money to be really precise.
Now, is there an advantage to being more precise in regards to how the practice is evaluated, in regards to potentially selling the practice, in regards to other tax planning, whether it's like, again, like personal tax or like long-term business tax? Like, is there an advantage to doing that? Because I'm guessing the way you answered and finished that statement is that the larger corporations do spend that time and money on being specific.
Yep. So when you get valued, and an oftentimes a key driver of your practice value, the key driver will be your earnings and your cash flow. Those are the approaches the evaluators use. Those really change things. So if your numbers, if you're thinking of selling, pinning down your numbers and being exact on what is exactly practice related and what is not, is important. And what people are being paid and for what and how efficient. So like numbers are a good indicator of the efficiency of your office. And so if you want an efficient office, a profit optimized office, then that becomes very valuable. Some people don't, they seem to say, I have a good sense for what's going on, and they have an intuitive sense of they're making money when their schedule is full, and that's what they're mostly worried about. And the other stuff they're not really too concerned about. Then I don't necessarily fault that approach at all. If you want to focus, I want to maximize the value of my practice, and I want to see if I can hit these numbers and targets, then the numbers become more important. For a multi-practice owner too, I would say that those are really critical tools to have. Because when you're in a multi-practice owner, you're not in the one clinic every day. You might not have an intuitive sense of what's happening. So you're going to rely on these numbers to come at you as an indicator of what's happening. And if those numbers are skewed or not tight, you will perhaps try to fix the wrong problems.
No, that's and the way you just answered that at the end is something I didn't even consider. Again, just again, when you're not in the practice running the business on a day-to-day, you rely on on those numbers to be your eyes and ears, because you're actually not there doing the work. So I guess that makes sense. In regards to selling practices, I'm sure it's a common thing people want to talk to you about, selling to corporations, selling to other solely owned dentists. What's kind of the top three things that need to be kind of in place? What time do they need to be in place? And how does that conversation generally go?
So that if they're ready to sell, they'll focus on their numbers again, because they're going to want to know what it's worth. They also have to be prepared to go through due diligence, and that due diligence with the corporate will be very different from due diligence with the peer. It's a tricky thing when you're selling the practice. If you sell to a corporate, they're going to do their due diligence and they're going to pin you to targets with holdbacks and all that sort of good stuff. If you're selling to a peer, that works in the practice already, then they're fairly comfortable with what's going on, and they're comfortable that the staff isn't going to hate them when they take over and try to change some stuff, right? If you're coming in and you've got an appraisal from an appraisal company and who's brokering it, and you're looking at that and you're like, okay, this is the numbers. You can dig all day long in numbers. There are some things and some risks you can't mitigate without being in the clinic, and the selling dentist might not want you in the clinic. So it's kind of a different, who you're going to sell to and who you're targeting can be very different. It can lead to different purchase prices. It can also lead to very different experiences. If you are targeting to sell to somebody who's working in the clinic, they've got a lot of the due diligence things in their head because they've just seen how it's being run. They know where a lot of the revenue is being driven from. It's being driven from orthodontics, and they don't do it when that practice owner, exits. They're going to have a drop in revenue if they've got to refer that out. So their due diligence, they have a lot of things in their mind already that makes the due diligence easier and makes the buyer a lot more comfortable. So it's different. The process is different. The experience is different depending on who you're targeting to exit to. Tax-wise, you'd want to give your accountant at least 2 or 3 years heads up before, so you can move things out of your professional corporation that you don't plan to sell. So you can move those out to another corporation. And oftentimes there are things in there, insurances, investments, all of those types of things. Those things take a while to move, and you'd want to give your accountant good lead time to be able to maximize your tax strategy on the exit. So yeah, and paying attention to knowing that a lot of your value is derived from your earnings calculation, like paying attention now to what is in there. Because it's a valuator's job to normalize your earnings and to pick out what is redundant to the corporation or not relevant when another person purchases it. It doesn't mean they're always are going to find it. So, paying attention to those, looking at your profitability, and just getting set up to do that is fairly important. It is a process, and lots of lead time would be needed. Your lease negotiations, how that looks is critical before selling too. So lots of eyes need to be on a different thinking of selling.
Yeah, and just in regards to the 3 year lead time, we've all heard stories, the unfortunate stories where for whatever reason a dentist needs to exit immediately, and that stuff isn't in place, and the money they walk out in their jeans after the sale of the practice is substantially less than what it could have been. Again, sometimes it's unfortunate, it's tragic, and that's a reality. Other times it's just honestly bad tax planning. So
yep, bad tax planning and bad timing. So you've seen some dentists, and again, I wouldn't blame them and say you've sold too late, but oftentimes you'll see dental clinics where the production was up and it's sliding, and the reason is because, well, the doctor just reduced their hours and they don't want to do these types of extractions anymore. Like, okay, that's going to hurt you. That'll hurt you a lot. If you go from 5 to 3.5 days of production, your practice value is going to be impacted by that substantially. You might want to, before you do that, you might want to think, would it be better if I sold this now and just worked as an associate for 3 days a week and the new doctor's there for the other 2 transitioning patients? That might be, if your motive was sheerly the bottom line, and I'm not saying it should be, that might be something you should analyze and assess.
I've read some news articles and headlines about the Canadian government going after recipients of some of the COVID relief packages. A lot of the stuff I've heard about has been about individuals. So that would be like the CERB payments. And just again, they're trying to go after it because they think some people received CERB when it was not required. Is there any concern in regards to CEWS and the relief that dental offices or other businesses have received during this time?
So if obviously the government had an unprecedented problem, and they dealt with it by implementing programs very quickly and deploying money as fast as they could see how. Whenever that's going to happen, there are going to be some people that are going to try to game the system, and that is going to cause a lack of trust amongst the regulators, which is oftentimes CRA, the enforcement. And so, yeah, there will be audits, there will be things like that. Now, that said, if I was an auditor, the CEWS in particular, the other subsidies are a little more, I don't think there'll be as much audit activity on them. The CERB there will be, but that's kind of an individual problem. The CEWS will be is the big one where I think there'll be a lot of reviews on. And if I was a dentist, I don't think I would be overly worried about that, because if I had a whole bunch of audits on my desk to look at, and one of them, the industry was shut down for a couple months, I would know their revenue was likely going to be down during those months that CEWS was claiming. There's a kind of a plus run rule on the outside of it. So on that, there would be if I was an auditor, I don't know if dental would be my first target.
Okay. Hey, your phone just rang. I'm looking at the clock. We're kind of running out of time. So, and
sure, yeah.
Real quick before we is there anything else that you wanted to touch on that we didn't discuss today?
No, I think that's a good gamut. We touched on financing, tax, a little bit of internal accounting. We talked about government subsidies, what associates are doing, where the winds are blowing. So yeah, you did pretty good leading through a wide gambit of topics to touch on as much as in depth as you probably want to in a venue like this. So yeah.
And again, we can definitely do this again. Happy to do it. There's obviously a lot we could pick one topic and really do a deep dive on something down in the future. But no, again, Tom, I thank you for doing this. It's really been great. I appreciate your time. What I will do, Tom, is I'll include all of your contact information in the show notes, in the bio, in the emails that I send out. So people have any questions, please reach out to Tom. If you want to talk to me first, by all means. But again, Tom's the guy. Again, Tom, hey, thanks for doing this. I really appreciate it. All the best to you and your team. And hopefully we can get together and catch up soon in person.
Thanks, Bob. Great job. Thanks.
Have a good day. Cheers. Bye for now.
Take care.